All right, let's stay on this topic and talk to someone who was a part of the hearing yesterday. Trey Hollingsworth is a representative from the state of Indiana, member of the House Financial Services Committee. Congressman, thanks so much for joining the program this morning. I'd love to start with asking you about your line of questioning, because you only spoke to Ken Griffin, and you had some really pointed questions there around off-exchange trading and tick sizes there. And I'm just curious, is this something that you and your staff are looking at to engage with the SEC on, and sort of what drove the impetus to spend some time with someone who knows a lot about that, getting into the arcana really of financial markets?
Absolutely. It is something that we're starting to look into. I want to make sure that we look at all aspects of policy framework and how this huge increase over the last 20 years of off-exchange trading, whether it has some deleterious impacts on the market or whether alternatively this is just a large trend that public policy has no ability to affect. I want to make sure that we've got the right framework to allow our exchanges to compete on a level playing field with those off-exchange dark pools.
Hi, Congressman. We heard a lot yesterday from many, especially on the other side of the aisle, saying that as you democratize trading, you need to make sure that you're watching out for retail investors. Some of them saying that Robinhood and other platforms aren't doing enough to protect those investors. What do you think about that?
Well, look, I certainly understand the idea that we've got a new class of traders that are just getting into the market. As was said just a few minutes ago, it takes real experience to understand how you can hold on to your money and grow your money over time. I want to make sure that we don't erect barriers that keep those new investors out of the market. I understand that my friends across the aisle want to make sure that they are well protected, but we shouldn't put new regulations in place under the name of protection that in fact just exclude a class of investors from being able to participate in financial markets. I think what I hear all the way across the district every single day is the feeling as though there are two financial worlds, one for the wealthy and one for those that aren't quite wealthy yet. And we want to make sure that we close the gap, we close the information, we close to parity so that those who want to become wealthy and control their financial future over time, that they have the ability to participate in the market.
Congressman, now that you've got a feel to just, you've felt out, you've got to see Robinhood's founder up close and personal, hear what he had to say. Do you think Robinhood as a platform, it's just a bad thing to have out there? The mere fact that it even exists?
No, I don't think Robinhood is a bad thing in and of itself. I think we've seen a whole new group of retail investors that are now participating in the market because of Robinhood. But I think we need to help people understand that with that great power over their financial futures comes a lot of responsibility and a lot of care that needs to be taken. And I hope Robinhood will continue to participate in relaying that to their customers, that there is a long process by which you need to think through your investments, not just what you might read on Reddit, that this is not a game, this is real life, and these are your real dollars.
Congressman, it's Julie here. I wonder not just about protecting the retail investor, but sort of improving market transparency and operations overall. There is the transparency issue, obviously, and both Robinhood and Citadel in the past have had to pay fines related to their own transparency practices and related to payment for order flow. But many retail investors now seem to understand they get free commissions. There is payment for order flow on the other side, and that's a price that they are willing to take, perhaps not getting the ideal price for their relatively small trades. But what about overall market functioning? Is it the best way for the overall market to function? And does that need to change?
Well, look, I would push back against that premise a little bit. What I continue to see in abundant research is, in fact, retail investors getting better execution than ever before. I think we saw research that said over $1.6 billion in price improvement in the first 6 months of last year alone that went to retail investors because of payment for order flow. So I think it's a little bit of a misunderstanding to say that retail investors aren't getting the best execution because of payment for order flow, or because it's going to market makers and not going to the exchange. In fact, they're getting better execution in these dark pools than they would in the exchange. And that's really what Ken and I were talking about, is making sure that we improve the competitiveness of exchanges to compete alongside dark pools to be able to deliver best execution to every investor in the market.
Congressman, the Robinhood CEO yesterday admitted that he has made some mistakes, that the company has made mistakes, but he didn't specify exactly what he was talking about. And on a call with reporters yesterday, Chairwoman Waters said that's something she really wants to look into going forward. Did you walk away with an idea of what mistakes he could have been talking about there? And if not, is that something that you're going to dig in on in the future?
I think there is some work to be done with this, and not just specific to Robinhood, but in brokerage writ large. We want to make sure that if you're trading in a certain stock on Wednesday, that you don't wake up on a Thursday and suddenly can't trade in that stock going forward. I think we need to think through whether brokerage firms can, without due notice to their customers, cease trading in certain securities. I think that's a real problem and something that we should look into. And I know certainly the Robinhood CEO defended himself in saying that this was a 1 in 3.5 million event, I think is what he said. I think we need to make sure that we hold brokerage to a high standards so that they are prepared for those outlier Six Sigma events so that brokerage customers are not caught unawares of that.
Well, Congressman, I'm curious if you would, I saw this event as kind of showing the system sort of worked, right? There was time for Robinhood to get the money together so that we didn't have an even larger event, which kind of suggested was on the table there. I'm curious if you see this as proving some resilience within financial markets as they're currently arranged.
Well, I think you're asking about a different aspect of this. So number one, there's the forward-facing aspect that went to customers themselves. That's where I think the problem is, right? Customers were told, hey, you can trade in any security when it's open at any time. And then suddenly we're told otherwise with an hour, with 2 hours of notice. That's different than I think what you're talking about is what really did work was inside the plumbing of the financial system. DTCC coming to Robinhood and saying, hey, given the trading that you're doing, given the volatility of those securities, and given that your investors are predominantly on one side of that, here's the margin that is required and the collateral that is required in order for you to continue those trades. That is working to keep the system safeguarded so that we don't have the significant counterparty risk that could arise if they were failing to do that. So that did work really, really well. My concern is Robinhood not having the capital or the foresight to see necessarily that was coming down the pike, given what their retail investors were doing, and the fact that they failed to give adequate notice, in my mind, that there would be ceasing trading in certain securities. And I understand the view that we should not force a financial firm to engage in transactions that might lead to its insolvency. But I do think brokerage firms owe a duty to their clients if they've represented that you can trade in all of these securities, all of these specific times. They owe a duty to their client to make sure that they're executing on what they've told and represented.
Yeah, it sounds a little bit sometimes like Robinhood is finding out what line of business it's exactly in as these events go along. All right, Congressman Trey Hollingsworth, representative from Indiana. Really appreciate the time this morning. Yahoo Finance's Jessica Smith as well. Thank you both.